Let's go, girls. Welcome to Talk Wealthy to Me. I'm Michelle Taylor, founder of Women in Wealth. From breaking money myths to building wealth and achieving financial freedom, we're here to empower you to create your own path. Talk Wealthy. Now, join the conversation and let's change the way women think and feel about money. Okay, ready? Hi, everybody. Welcome back to Talk Wealthy to Me. I'm Michelle Taylor, and today I know this podcast is going to have something for everyone that they can implement immediately, and that is so exciting for me. I want to make sure that today you leave with a good understanding of something that we are all hearing about all over media, all over TV, radio, friends, everything. And that is the one big, beautiful bill. So if you're like me, when you hear about something like this, you immediately think, okay, what does this tax bill mean for me and my money? And whether you're running your own business, renting out properties, or just trying to make your hard-earned cash work harder for you, there are opportunities here, real ones for everybody. It just takes understanding what is meant for you and how to capitalize on it. So how do we do that? Today, we're going to break down all of it. We are going to touch on taxes, healthcare, family benefits, retirement savings, and of course, stock market implications. And yes, bonus depreciation, Section 179, and cost segregation. Now, these three pieces may be things you've never heard about before, or maybe things that you've heard about on social media or your friends talking about, and you have no idea what they are. These are definitely the showstoppers in this bill, and I'm going to break down what they are and how you can make these part of your plan. By the end of this episode, you will have practical ways to save money, grow your wealth, and make this tax law work for you. So, what does this mean for you if you're an individual and not a business owner? Well, there's a lot in here for you all. First up is child tax credit. So if you've got kiddos at home, there are some really exciting changes. One of which is you're getting up to $3,600 per child under 6 and $3,000 per child as long as there be between the ages of 6 and 17. Now, this is a child tax credit. And in tax world, credits are the absolute best. A little bit stronger than a deduction. Okay, so let's break this down. What does that actually mean to you? If you've got, let's say, 2 kiddos, you are able to reduce your income and what you're paying taxes on by $3,600 or $3,000 per child. Now, this is a way that you can actually even work your way into a refund, hypothetically. This isn't a deduction that then runs through your tax bracket. This is something that literally takes the cash off of the table. So this is an increase, and this is something that, as long as you have children, is going to impact you in a positive way. The next piece is also a credit, and that is the earned income tax credit. And what that basically means is it's expanded eligibility for low to moderate income single people or people with families. You may see this as an acronym EITC. If you ever do and don't know what that is, always look it up because knowledge is power. But basically, it's really important to understand how these pieces can work together for you as a taxpayer. The next piece is really understanding some of the deductions and credits around medical expenses. The threshold is going to stay the same. It's 7.5% of your AGI. AGI means your adjusted gross income. So I will use me personally as an example. My husband and I went through IVF. That can be a very expensive procedure to go through. Well, they do a calculation to determine if the amount of money that you're spending on your medical treatment is above 7.5% of your adjusted gross income. Now you can treat it as a deduction. And a lot of people miss this, especially if you're not working with a CPA. So I hope that nobody listening has a ton of medical bills. It means you are healthy. But if you do, add those up and see if there's a way that that can be money that you keep in your pocket. The energy efficient credits and deductions around home improvements has changed a little bit. They're not as great as they were, but some are still there. So I would encourage you all to just do some research and think through if it makes sense to look into some of those improvements. Okay, so shifting now to the business owners. So this gets obviously to be a little bit more fun because there's a little bit more that we have access to. First things first, any of these energy credits for your business are still applicable. They can very easily result in a 30% credit, which is big. Also, hiring incentives. So you're going to get $4,000 to $6,000 of a credit, which will immediately dollar for dollar reduce what you owe by hiring new employees in certain sectors. And those sectors, for example, are clean energy or in underdeserved communities. So really quick and easy ways to make a good hire an even better hire. So let me give you a couple of examples of how these things are applicable. If you're a boutique and you install $20,000 solar panels, you are going to receive a $6,000 credit on your taxes. If you are hiring an employee that is in a qualifying sector, you're going to get a $4,000 credit. So just by those two strategies within this new bill, you're going to save true $10,000 in your pocket instead of sending it to Uncle Sam. Okay, with that being said, let's talk through the healthcare and family benefit side of things. So ACA premium subsidies, that is the Affordable Care Act. Some things to note here. Households making up to 500% of FPL could be saving $150 to $300 a month. So if you are somebody that is getting your healthcare benefits through the marketplace and you're a single woman making $70,000 a year, that means you may be able to save about $200 a month or $2,400 over the year. And if you have kiddos, obviously there's so many different ways that you can plan with HSAs and FSAs and all of that. Always explore those things with a tax professional or your consultant and advisor. But just keeping it high level right now, you definitely want to make sure that you're getting that $4,000 for one child or $8,000 for two or more credit because of the cost of their care and providing that to them. So that's another easy way to save, and it's a credit, which is, again, the best of the best. So another really important thing for women who are doing any kind of family planning, right now, up to 25% of wages for up to 12 weeks for qualifying employees is part of this bill. What does that mean? If you're a small business with 3 employees and you're paying $15,000 for 6 weeks of paid leave, that is going to result in a $3,750 tax credit for you. So at 25% of the cost. All really good ways as business owners that you can improve upon what you're able to do for your employees and have it also benefit you as the business owner. All of us should be saving and planning for our future, right? So retirement and savings, let's dive into those. Small businesses that have retirement plans such as SEPs, Simples, and 401ks to offer to their employees, they are going to receive up to $500 in credits per employee for starting a plan. So if you've got a big team, not only is it going to improve their lives because it will encourage them to save for the future, but it's also going to impact the bottom line of what you are due to the IRS at the end of the year. So it's a win-win. Again, it is all about providing the right kind of benefits to improve upon the life of the employees, but also making those relationships sticky, which inevitably is going to benefit you in the long run as well. Employees oftentimes are job hunting to improve upon the benefits that they're being offered. So this one is really exciting. So as a reminder around contributions, if you are looking to fund a 401k, if you are under 50 years old, it's going to be $23,000 for the year. If you're over 50 years old, they allow for you to catch up and you're allowed to put in up to $50,000 a year. As far as IRAs go, $6,500 if you're under 50 and $7,500 if you're over 50. So let's talk about this again using real life examples. If you were to implement a simple IRA for you and your employees, that would result in a $500 tax credit, plus the employees can save for pre-tax retirement. Win-win. If you're an individual and you're contributing to your IRA and fully maxing that out, that's $7,500 you're paying taxes on today, but it is the only retirement account that somebody can contribute to where it grows entirely tax-free and comes out tax-free. So that's always a great place to start. All right. This one is getting a lot of attention all over social media, but no one is really telling you the who, what, when, where, why on it. So I want to take some time to do that today. I am sure you may have heard some hot button items like bonus depreciation and Section 179. Now, I will tell you guys, so often this can be a complete and utter game changer for people when they're really diving into strategy and working with professionals to limit what they're sending of their hard-earned money to the IRS. And what's really unique about this is you're buying an asset and it's just how you're depreciating it over time, but it's still your asset forever or until you sell. So what is bonus depreciation? Well, right now, the way that this is worded is you get 100% bonus depreciation for new and used business assets. This is big. How this works is basically it is applicable to equipment, machinery, furniture, vehicles, and certain improvements. Also, of course, real estate. The idea behind this is when you own something that qualifies as a business asset and meets other certain requirements, for example, if it's a vehicle, it's of a certain weight. If that happens, you're able to accelerate how fast you get the depreciation, and that comes down to a really big number. It reduces your taxable income dramatically in the years that assets are placed in service. Now, what's awesome about this is if you're buying a new truck or a vehicle and you're going to use it at least 50% of the time for your business, you don't have to buy something brand new. It just needs to be brand new to you. So you can put down $5,000 as a down payment, but then take the total cost of that equipment or the vehicle and get the entire amount depreciated in the very beginning of the lifespan. Now, you want to make sure with this that you need the item, right? You never want to spend $1 to save 30 cents just because you want to save the 30 cents. You want to need to spend the dollar. Also, you need to consider a few things like these are assets that you want to hold for a while, because if you don't hold it until that depreciation schedule has been exhausted, the IRS will come back and say, well, you depreciated this quickly and then got rid of it. So we want some of that depreciation back because you didn't wait long enough. So again, all conversations that you need to be having with somebody in this space. So Section 179 is basically a way that lays out a blueprint that you can deduct up to $1,160,000 per year. This starts to phase out with the amount that is purchased, but basically, it can be combined with bonus depreciation, which is going to allow for a maximum savings for the business owner. And guys, if you're listening and you think, well, I'm a business owner, but I'm a solopreneur, or I don't have a huge base of employees working for me, these are still things that you can use as long as you are following the parameters that the IRS has put into place. So don't think that just because you are in a massive business, these aren't things that you can partake in as well. Now, let's dive into cost segregation studies. So this is a favorite of mine because when you own a piece of property, the standard way to depreciate that is over 27 and a half years. What that means is you take the cost of the structure, take the amount that is valued for the land. Take that out of the equation because land is not depreciable. But if you look at that number, then it is broken up evenly over 27 and a half years. And that is likely what your CPA is deducting year after year after year. Now, this study allows engineers to come in, look at the value of the property, and basically break it down piece by piece and actually look at what the lifespan is for each of those pieces. Very, very few of them are actually for 27 and a half years. So for rental properties, for example, it separates the building into components, roof, HVAC, electrical, etc. And then it's speeding up all of those 27 and a half years into the first 5 years that you own a property. Now, one thing to remember with this is you have to hold on to the property for 5 years or more to avoid that clawback of recapturing the depreciation. And it is going to be exhausted, and you will have to then do more tax planning and look for different strategies in the future. This isn't something that will spread out. You use it all in the beginning, and then it's depleted. But to give you some practical examples here, let's say that you're a boutique owner and you buy $50,000 of furniture and equipment that you need to run your business to grow and scale. With bonus depreciation the way it is now, you would get $50,000 in deduction for year one. That would be an immediate tax savings of $12,500, assuming a 25% tax bracket. If you are in a tech service business and you buy $200,000 of computers or servers, furniture, same thing. You're going to deduct the full $200,000, and then that's going to result in $50,000 of pure tax savings. If you are someone who owns a rental property, and this does get a little bit more complicated, but I'm just going to give you some things to start thinking about because there are a lot of different boxes we have to check here around rental properties. For example, if you have a $500,000 property, basically what you're looking for is $150,000 of depreciation because of the cost seg. And then you've got bonus depreciation, and that reduces your taxable rental income immediately by $50,000 to $100,000, you guys. So these are some of the strategies that really wealthy people that have built their wealth either by themselves or, generation to generation. This is why they love real estate, because it really does provide so many opportunities to create income streams, but also on the tax side of things, it is a golden nugget if you do it the right way and you partner with the right professionals to make sure all the due diligence is done on the back end. That is the key here. Don't listen to something, take it for advice. Even this is not advice. Okay, so if any of these things piqued your interest, I would say you need to start to plan your purchases. If you're a business owner, start thinking about buying these qualifying assets now and then using that 100% bonus depreciation. Work with professionals to figure out a way to combine Section 179 and bonus depreciation to capture the maximum deduction that you can. Make sure that you have a really good CPA on your personal board of directors so that everything is being done appropriately and that you're truly optimizing everything at your disposal. Now, I'm going to put a little asterisk here. If you have questions on how do I find these CPAs that are going to go above and beyond and truly bring value to what I'm doing and not just filing taxes at the end of the year, you want to have a relationship that's proactive. And there are questions you need to ask. If you're listening and wondering what those questions are, drop me a DM or something in the comments, and I'll make sure to get you what you need to get the right people on your team. That is critical. And then lastly, all of these dollars that you're saving, right, in tax savings, let's be proactive with them. You want to look at every dollar saved, not as something that you want to go out and have fun with. Sure, some of it, but look at it as an opportunity to reinvest in your business, put it towards investments that are going to get you to the next level, or think about the long term. Buy that second home, but buying that second home is growing your net worth. So it's a win-win. Again, Just make sure that you're being proactive and not wasting the opportunity of dollars saved. Okay, so with this, also, a lot of people are wondering how this bill is going to impact their investments. And with anything that happens within the economy, there are repercussions on different positions and stocks within the market. If interest rates go up, bonds perform better. If they're down, bonds aren't going to give you as much of an interest. Same thing with any of the specific companies or holdings that you may have within your portfolios. You want to kind of look for the ones that are going to benefit from not only this tax plan, but any tax plan, any kind of change here. Always try and think how companies would perform based on these results. So, with this bill, one of the sectors that I would be paying attention to are green energy. I would be paying attention to healthcare stocks, infrastructure, things like that. So if you've got a portfolio with 20% of it being allocated to clean energy ETFs, you could see some long-term growth due to some of the federal incentives that are there. Same with tax credits and bonuses. They're going to increase disposable income. That's going to allow you and others to have more capital to invest in themselves, their futures, or their business. So definitely things that you want to pay attention to. And ultimately, just remember the stock market is cyclical. If we know we have a long time horizon, data tells us that we have 100% chance of seeing a positive return in any 15-year section of the market's history. So if you are young, you should consider that when making some of these choices because you've got time on your side. So if I'm a woman listening, what are the things that I want to make sure I'm doing as a result of this? For business owners, make sure that you're auditing your payroll and benefits, getting all of the eligible credits that are there, and also possibly providing a stickier, happier environment for the employees that you have and care about. I would also make strategic purchases to leverage bonus depreciation and Section 179. I would open or expand the retirement plans that you're offering to your employees currently. That is also going to capture some of those credits. And then if there's an opportunity for you to purchase a building for your business, this is the perfect time to do it. Real estate holdings are always a positive as long as it isn't going to impact you being able to run your business or any other big goals that are going on in your life. You can pay your mortgage instead of someone else's rent and get the tax credit. So again, win-win. If you are not a business owner and just an individual listening, you want to make sure that you're maxing out your child tax, dependent care, and energy credits. You want to make sure that you are contributing the max amount to your retirement accounts that you can. And you want to make sure that you're reinvesting your tax savings. So when you get a refund, put it to good use. And something else I want to make sure I mention here. When you get a refund, I want you to think of that a little bit differently. That should not necessarily be something that you're overly excited about. You really want to break even at the end of the year or pay very little because if the IRS is sending you a big chunk of money back, all that means is that you overpaid throughout the year and you gave them a loan that was free to them. So don't always shoot for getting a big refund. Usually people get that and get excited and do something else with it. I would personally rather everybody listening either shoot for owing nothing, paying a little bit, or putting that money to good use day in and day out, month after month, instead of letting the IRS use it. So in general, make sure that you're tracking and documenting all eligible purchases and deductions. Make sure you're paying attention to those medical expenses if you think that this year there were a lot more. And then always, always consult with a trusted CPA and somebody who is well-versed in tax strategy. Don't settle for anything less than you deserve. All right, girls. So as we wrap this up, I want you to really be able to take away so much from this and actually put it to good use in your life. The Big Beautiful Bill, or BBB, as so many people call it, it comes with big changes. So I want you to understand the changes. And I know we talked a ton today about a lot of things. If there was something that you think may work for you, take a step back, do some research, find trusted partners to figure out a way to make it work for you. You want to make sure that you understand that the changes are big, but the opportunities are bigger, especially for people that are looking to grow and scale their personal net worth by acquiring assets. Huge opportunities here, guys. And don't look at this from an emotional perspective, as always. So, bonus depreciation, childcare credits, it's full of ways to grow your business, to save on your taxes, and invest in your future. I hope that anybody listening will get a ton of information from this and see the reward from it. Share this with friends. These are conversations that we should be having. Ask questions, find the people that may be able to solve a problem for you, and do everything in your power to be an advocate for yourself. Visit womeninwealth.co as always if there's any information that you think would be valuable to you that you don't have. And like, share, subscribe, and keep tuning in. As always, I am here to make sure that we are changing the way women think and feel about money and giving you all of the tools to change not only your life, but the generations that will follow you. With that being said, I will see you all next week.